Guys, welcome to another daily video on the Everything Money Plus channel where we go over what's going on in the markets. We're going to go over a few things today. I'm going to start off with this. Not a bubble, but maybe an air pocket. Wall Street says it's time to reset the AI narrative. Here's what they're saying below. Two of Wall Street's biggest firms say the AI boom is far from a speculative mania. Instead, BlackRock, who sells a lot of funds to people, and Bank of America, who has a lot of investor money, etc., say this cycle is being driven by real corporate investment, earnings, and productivity gains, not the kind of irrational exuberance that defined the dot-com bubble of the early 2000s. Wrong. Guys, let's go back to the late 90s. We had something back then called a surplus. Now, I know people don't know what a surplus is because we never have it, but an economic surplus. This was not because Bill Clinton was some amazing president who balanced the budget. It's because productivity and real corporate growth was huge in the late 90s. We had 8 to 9% real GDP growth back then. Do you know how insanely high that is? We don't get that from not having real corporate investment, real earnings, and real productivity gains. We had it back then. We were at the beginning stages at the time, and even till today, might be the biggest boom that ever happened. Because yes, AI is a totally different level, but internet was just a transformative world for us. We went from not being able to talk to each other at all, except for picking up the phone and calling each other. And if your kid was on the phone, you had to wait because the line was busy, to all of a sudden you could chat at any point, anytime. Do you understand how different that was? We had earnings growth. We had real corporate investment. We had major productivity gains. We also had a lot more garbage companies out there that were valued insanely high that weren't making a lot of money, like ChatGPT, like all OpenAI, like all these other things that aren't making a lot of money. Now, it's not a lot of small ones like we had in the EV world of years past, where some company just came out and said, hey, we're planning this new car and the stock rose and now it's zero. I get that. I do think there's a lot of differences between now and back then. But this is, every company is massively overvalued. AI has driven this to, I get it. Here's what I'll say. History doesn't repeat itself, it rhymes. You always have to ask the question, what is their intent? Now, you ask the question to me, Paul, what is your intent? Well, do I like stocks being lower? Yes. Why? I like buying cheaper stocks. But at the end of the day, I also know that I look at this very consistently. I'm not sitting there saying that buying cheaper stocks is, yes, it's going to make me more money, but I look at it going, it'll make you more money too. I'm not trying to sell some product. We do sell a product, by the way, but in actuality, I think a bad bear market would hurt our product because then people would get less enthusiastic about stocks. That would actually hurt our ability probably to sell more of our product, even though it would help people a lot. I'm not saying that just because somebody has a bias, you shouldn't listen to them. But BlackRock and Bank of America, guys, I'm going to tell you right now, all the big banks, they're not smart. They're late to the game. They always say based on what the market has recently done. That's always the case. Go look at history. And when they make their projections for the following year, it's 10 or 12% higher. Guys, I look at this thing to myself, does history repeat itself? No. Does it rhyme? Absolutely. This is very much, it's kind of like a mix of the Nifty 50 in the 70s, as well as the dot-com bubble. It's like you just got to own these companies. Like I saw something the other day say, every investor needs to have Tesla in their portfolio. I consider Tesla and Palantir to be the two most overpriced companies probably in the country. Tesla is there. It's being valued as something that it's not. I've been saying that for years. People keep telling me I'm wrong. Okay, we'll see. And guess what? Michael Burry made a great comment recently. He's like, when it was all EV, the cult was on EV, and then all of a sudden competitors show up, then it was software, then competitors showed up, and now it's robots. What happens when competitors show up then? Now, one thing that's interesting to me is there is a company that I currently own, don't buy any company just because I or anybody on the internet has it, Intel, which I was surprised to find out yesterday was at $43 per share. This company was at $19 how long ago? Let me see. 1766 just in April. On the low of the NASDAQ, 1766. Guys, this company's got, so look at this. The average person has it to hold with a $29 intrinsic value in our community. This is a turnaround project. This is not going to be an easy one, guys. I've said this before. I'm really shocked about this with Intel. That was up to 44. Literally, when they said it in the studio yesterday, I was like, are you kidding me? Goes to show I don't pay attention to what my stocks are selling at. I could not care less. I mean, I'm up on my Intel investment right now, and I could not care less because I look at this as laughable. I'm like, do I think it's worth $44 a share as of this very second? It's probably hard to justify that, but let's take a look at it. Because guys, Intel is a company with a very good chip, a very still solid chip that has a lot of potential. I don't think you dismiss Intel. It's not like it's a company that people aren't using their chips and there still isn't a lot of good news and reviews on their chips. So I don't think you count that out. But is the company itself down and out? Yeah. Guys, I did some revenue growth projections. Let's first look at analyst estimates and see what they did about revenue. Even, small growth, 5%, 16, 14%. Keep in mind, in 4 years, it's still not at an all-time high of revenue. But the point is, they might be able to get up there. Now, I heard some rumor that Intel is making chips for Apple. So here it is. Your next Mac might run on an Intel processor, which is a gigantic surprise considering Apple dropped the chip maker years ago in favor of Taiwan Semiconductor. But there's a standout reason why Apple needs Intel. Let's start looking at this. So even though the government's taking this 10% stake, the primary reason for the change, it's about Apple's overdependence on Taiwan Semiconductor. The partnership between Apple and the Taiwanese foundry works brilliantly for both companies. Apple gets the most advanced processors while Taiwan Semiconductor gets billions of dollars. But an important part of Apple's strategy when sourcing components for Mac, iPhone, etc., is not to depend on a single supplier. Apple makes up 25% of Taiwan Semiconductor's business. They're just trying to diversify. What better way to diversify than buying from a local chip manufacturer that you have experience with? And Apple dropped them years ago because of delays on their chips. So let's see if this works out for them. But if it does work out for them, this is some potential here. So let's pull up the stock analyzer tool. I'm going to reduce these assumptions here. I'm going to do revenue growth of 4, 7, and 10%. Now, before the last 10 years, this 15% average profit margin includes the last 5 years at 5.5%. They were 20 to 22%. I'm going to go lower. I'm going 12, 16, and 20 for both profit margin and free cash flow. Now, PE and price to free cash flow, if it works out, 14, 17, and 20, and a 9% return. This is just me saying, what's the company worth if these things play out? Now, are there issues with all of these? Of course. There's always going to be issues. The question is it possible for them to double their revenue in 10 years? Yeah. Look at the chip business in general. They just get good footing back in here. They could ride that wave with chips. We hit the analyze button, and look what we got, guys. When it was at $17, $18 a share, this is why I was pretty intent on it. But at 42, at 43.70, I got a low price of 22, a high price of 74. Now, keep in mind, guys, this 74 is based on lower profit margin than they historically had before their problems occurred. This is a turnaround play. It is not for the faint of heart. This is going to take a while if it even works out. But at $18, $17 a share, at that point, I even said in the studio today, why wouldn't Intel just go private? Find some private equity, go private, focus on growing back, and then go public again in the future. At $17, $18 a share, that's when other companies started saying, maybe we should buy Intel. That's when Apple might just go, why don't we just buy Intel? Because look at it this way. The market cap of Intel right now is $197 billion. When it was at $17 a share, what is that? That would make it like an $80 billion company. $80 billion? Apple makes $100 billion a year in cash flow. Just go pay cash for that bad boy. You bought a business that's generating some good revenue and you can put them in all your chips and all your computers, and then you're not reliant on some outside manufacturer, you're relying on yourself. That's what I look at Intel saying. At $17, $18 a share, what's the low side? 12 to 15 before somebody buys them out? Your juice, the upside, is worth way more than the downside, in my opinion. And this is the way you need to look at investing. This is exactly how you have to look at investing. You have to look at it and say, what's the downside versus the upside? If your chance of losing 50% is 50%, but your chance of gaining 500% is 50%. You make that bet all day long, right? But if your chance of losing 50% is 80% and the chance of making 500% is 10%, let's do it this way. 90 versus 10, that's a little bit scarier situation. You got to sit there and be cautious there. Or maybe it's not even 500%. That's the problem we have with some of these big companies out there like NVIDIA, Palantir. What's the upside potential to NVIDIA and Palantir versus what's the downside if things don't work out? I don't think it's a symmetric investment opportunity there. And that's all you're doing. If I told you every time you guess heads or tails right, I'd pay you a payout of 60%, you do it every single time because your chance of being right randomly is 50%. So just take heads every single time, keep flipping it, and guess what? You'll make a lot of money. Because guess what the casinos do? On blackjack, their odds are 50.1 or 50.2%, and they make billions of dollars for that reason with that 0.1 or 0.2% difference. That's a big difference here. That's all investing is calculated bets. Now, this is a random story I'm going to tell you guys, but it's something I talk about a lot. We used to have a real estate channel. I own a lot of real estate. I have about 1,000 units upstairs. We have homes internationally that we rent out. I personally have 5 homes spread around the country that I rent out for investment. My first deal in real estate was 1998. I was 17 years old. We lived in a house in Akron, Ohio on a lake. For those of you who are from the Northeast Ohio area, you definitely know the lake. But anyways, my dad decided when I was entering my senior year of high school, he said, like, listen, we're going to move back to Canton, Ohio. I said, okay. Because my dad got obsessed with golf and wanted to live near a golf course that he loved. So he brought a realtor in. And the realtor said, and you're going to hear a cocky version of me, of course, but that shouldn't surprise you. The realtor came in and said, hey, I want to list your house for $340,000. And I remember right in front of the realtor, I looked at my dad and said, Dad, just let's give it a month. Let's just put a sign in the yard. And we were living on a lake, so sign on the lakeside, and let's list it for $360,000. Well, guess what? We sold it for $355,000 2 weeks later. We recently had a house in Mexico, and the realtor's a friend of mine, so I don't think she sees this video, so it's fine. We went to her and said, hey, we want to sell this house in Mexico and buy 2 different houses. We said, what should we ask for the house? She said $2.4 million. Well, luckily, upstairs, we looked at the comps, we're like, how's she getting 2.4? This should be all day long a $2.9 to $3 million house. So we pushed back and we listed it for 3.05. Well, we just went into contract the other day at 2.9 million. My whole point is, I look at this saying, don't trust realtors, they're salespeople. There's a reason why, and I just posted this on Twitter right now, and follow me on Twitter if you want to troll me about this or just see some musings at EMPaulG. But realtors are salespeople. They're not investors. They're not real estate experts. They're salespeople. When the market is up, they take all the credit in the world. When the market is down, it's the market, it's bad. Remember, they're there for a quick sale because they want a quick commission. There's a reason why realtor houses stay for sale. When they're selling their own house, they stay for sale on average 2 weeks longer than everybody else. Because if they get an extra 10,000 of that, they're getting that full 10,000. But if they're selling your house, they get an extra 10,000 for you. How much are they getting? They're getting about 3% of that. They're getting $300. Are they going to risk the sale for $300? No, they're going to push you at this is the best price you're going to get. There's an old saying, the first offer is the best one. Not true. I have never gotten a low ball first offer and regretted later not taking it. Not once. And I have 1,000 units. I have 85 or 100 homes that we rent out. We've sold several. I flipped them. Never had that happen. Is this me trying to shit on realtors? Absolutely. I can't stand the industry. It's absolutely useless. I have good realtor friends. They hate it when I say this, but it's an absolutely useless industry. But it's something I must say over and over. I don't know why we use realtors. I still don't get it. Zillow, you can put your house up for sale. What's that? For sale by owner or something like that. FSBO. There's 1,000. Here's what I always say. If your house is worth $400,000 all day long, if you list it for $350,000, how fast would it sell? Guys, you'd have to just call one person and say, tell your friends this house is $350,000. It would sell like that. So why are you paying a realtor on the first $350,000? My friend upstairs said we should tell the realtor in Mexico we're only going to pay her on the spread. We're only going to pay her on the spread between what she wanted and what we wanted. And even then, I'd be like, no, we shouldn't even do that. But we needed somebody local because that was in Mexico, etc. But just remember, you probably know more about your home value. Now, it's hard for realtors also because most people think their house is worth a ton more than it actually is. I'm one of the few people in the world that thinks that. When Andrew first told me what he wanted to sell our Mexico house for, I was like, really? That much? I didn't realize it was worth that much. I recently had a realtor come to my house and tell me what my personal residence was worth. I was floored on the high side. I was like, oh, that's awesome. So there is benefits in that regard. But I look at it going, man, the whole gibberish that's going on in the industry, it's just a broken industry. The compensation structure isn't right. It doesn't incentivize realtors to do what's right for the client. And the more they say they do what's right for the client, the more I don't believe it. It's absolute garbage. So that's my musing. Thank you very much for listening. Guys, if you like this channel, if you think I'm a royal prick or you don't think I'm a royal prick, subscribe. I'll see you later.